Guys, those who are through Zoom, can you all see the slides?
Yes, ma'am.
Okay, guys, now I can't wait until the others are coming. They need to come at 12:30. So we'll start. So actually, this is on topic 2. It should go as topic 3. So this is our third lesson. So in our first lesson, we got the overall idea about the host and the connectivity. And the second one, we specifically now moving to corporate governance. So hope you can remember we were studying about the theoretical justification for corporate governance, right? So today the focus is on what are the different ways of making corporate governance codes, right? So before going to the Sri Lankan context and trying to understand what are the corporate governance guidelines we have, first of all, we need to understand how these corporate governance codes are developed in different countries. So as the topic says, corporate governance guidelines and approaches. So in this topic, we are going to basically look at what are the different ways that corporate governance codes can be developed. Okay. So first of all, what is a corporate governance code? Then of the corporate governance, all these guidelines, they have put it as codes, corporate governance codes, right? So as the slide says, the corporate governance guidelines are developed as governance codes. Okay, so the governance code is a document that contains all the principles and rules for managing the organization. So governance in normal sense is about how organization should manage, right? So this corporate governance code is the document, right? It is a physical document which says all the principles and rules with regards to how to govern an organization properly. Third point says it's kind of written corporate constitutes that is necessary for the group to set the framework for collective function. So if this document was not there, so it's in written form, right? Lanka with corporate governance code, it's in written form, right? So in every country, it is in written form. So that helps organization to understand if we want to govern a corporation in a proper way, what are the things we should have? Okay, corporate governance code data written in then we can refer and see because it has all the instructions which says if you want to have a right conduct of an organization, these elements should be there, right? They are talking about the board. They are talking about the role of the chairman. They are talking about the role of the CEO, right? Then they are talking about the reporting and the accountability. So likewise, under separate topics, they give guideline which says these are the best practice or best way that you should have, right? So likewise, we have a code here. So now we are going to understand if different countries are having codes, how are these codes being implemented? Okay. So as the topic says, so this topic and the topic that comes afterwards talking about how these corporate governance codes are being developed, which is called the approaches to corporate governance. Right. Second one, what is the international corporate governance codes which every country needs to look for, right? Those are called international corporate governance codes. So you have the local corporate governance codes, like what we are having in Sri Lanka, what you have in USA, what you have in UK. So jurisdiction-wise, we have our separate individual corporate governance guidelines. But apart from that, there are international corporate governance guidelines also because you will see that from the next slide. Now investors are not only investing locally, right? Investors are now moving to global organizations for their investment. So that when you have local corporate governance, that applies to that country only, right? So likewise, every country will have their individual corporate governance which applies to their country. But when investors are moving internationally with their funds, they want one international accepted right framework, right? That is why you have, apart from the local corporate governance codes, international corporate governance codes also. So to protect the international investments that are taking place, right? So that is why both these areas we need to cover. Right. So if we go back to the basics, right? Why do why do countries need to come up with corporate governance codes? Can't they operate without them? So as we identified in our first class, right, there are a lot of corporate scandals that have happened around the world. That kind of got up there. So this, as I said in the very first class, impact on investor confidence. Right? When these shocks happen, investors lose confidence on investing on companies. If they put their everything what they have, they are going to invest on these companies. So at overnight, they are going to lose everything. So then no one will come to the capital market. Right? If the capital market there will be no investments in share market. Then you can't get funds for organization to move on. Therefore, the first reason was to avoid these corporate scandals happening in the future. So as the point says, the first driving force for corporate governance code development was corporate scandals. So high-profile corporate scandals highlight the need for strong governance framework. That was the first reason. Right? When these scandals were happening, it was shocking. Investors lost confidence. So there was a need to bring confidence back to the investors by showing that we have now developed the right corporate governance codes, right? And we are enforcing these companies to follow them. So that will give you some assurance that many companies that may be my management. Right? Because you need to disclose your corporate governance practices in your annual report. I will show you how they are reporting on those things. Right? They have to give the details of the board, who is running, who are the people in there, who are the what are their qualifications, right? Then you have to show the diversity, then you have to show the remuneration you are paying for them. So all these are now part of the annual report. You need to disclose those things. So that to certain extent, with confidence back again, right? Therefore, first one was that to build the confidence, there was a need to show these organizations are governed in a proper way with a framework. As I said, the second point, it says, investors from different parts of the world invest in companies globally. They expect standardized governance practices that ensure transparency, accountability, and protection of their interests. So if we have locally, right, sometimes the local ones does not answer to the international flows that are happening. Right? International flows, you need some guideline which comes from international wise, which applies to all the countries. Right? In the same way. That is why you need international corporate governance codes. So investors, rather than the locally, if problem happens, if I invest in UK and if I invest in USA and a problem happen, because then those US UK companies will look at the corporate governance practices according to their context. Right? So for me to have assurance, then I have to refer to the global. I have to check that are they following the global practices as well. So you need to understand when you are making the local ones, you refer to the global ones also. And you understand. We have to inline with the global practices also. Otherwise, our corporate governance code will not be in line with the corporate governance practices of other countries. Right? We have to customize, localize it, but we have to have the needed things which international code says to have in our codes as well. Okay, so we will have a customized version in line with the international corporate governance codes. Okay, so that kind of which is mainly needed is for this transferring of funds from one country to the other. Third one, investor concerns. Now, when I am investing in a company, there can be, I told you, fairness is a very important factor. Corporate governance codes and principles are fairness. Treating everyone in the same way. Right? So this also was a very important thing for investors. I may be an individual investor, right? But I also want my needs to be protected, my interest to be protected. Right? If you are an institutional investor, you're powerful. Right? You have invested a lot. So what happened in most of the cases are sometimes companies give preference to one segment of shareholders. Can you remember I said concentrated shareholders? First lesson, I talked about two types of shareholders that can have. Some people, concentrated shareholders means more than 50% of the shares are held by few people. Right? So if that is the case, which is the case in most of the Asian countries, where more than 50% is under one set of people, then they dominate the decision making. Right? You need to understand. If you look at, now there's a friend of mine who works at this EPI. So in those cases, you don't know how much those owners of those organizations comes and they write checks to do certain payments and they were taking money, right? So they are powerful and they are dominating, right? So in that case, for small investors like you and me, where is the assurance, right? They are using the money as the way they want. So there is a problem in investors having doubts on whether their interest will be secured. To ensure, don't worry, everyone will be treated in the same manner, everyone will be interest will be secured. Then also corporate governance implementation is important, right? To show corporate governance implement you treat everyone in the equal way because you are going through those 12 principles by implementing corporate governance codes. First lesson we have to carry 12 principles. Starting from fairness, and there were so many things. So corporate governance practices implementation means you are ensuring those principles, right? So that is why rather than having differential treatments to different investors, you have to build confidence that everyone is treated equal way. That was the third reason why corporate governance guidelines were needed. Corporate collapse happened, investor confidence was lost, so we needed a framework to rebuild that. Second one was there was international investments happening, so investors wanted international wise guidelines to ensure that their interests are protected. Third one was investors were concerned whether everyone is treated in the equal manner. It can be domestic or foreign investor. It can be a small or a big investor, right? So this investment, their interests are secured for something they wanted, they were looking for. That is what it said. The differential treatment of domestic and foreign investors, both in terms of reporting and associated right dividends, and the excessive influence of majority shareholders in insider jurisdiction caused many investors to call for party of treatment. Right? These are the fairness issues. Right? Some are the domestic investors, that foreign investors, that different with the treat. You got information unlimited. But if you are a shareholder, everyone should be treated in the same way. They're not. Can you put the information? Yeah, he may be a dominating shareholder, But we can't be having more information than a normal shareholder. Everyone should be having equal access to shareholder information. Same as dividends. You are giving dividends to major shareholders, you have to give dividends to the others as well, and the rights. So investors wanted this confidence on these things would be fair. So this call for corporate governance guidelines to make sure everyone is treated equal. There are the main reasons to that, right? Then third one, to ensure quality of your accounting. So all these time, you look at all these corporate scandals, the place that they use or manipulate things was their reporting process. In many organizations, they were not disclosing the true picture. මසාජ් කරගෙන නැගිටිනවා. ඔක්කොම ඉන්නවා ඛණ්ඩ වගේ බලාගෙන මම දන්නවා මෙතන නෙවෙයි ඉන්නේ කියලා. හරිද? පොඩ්ඩක් hina වෙලා මේ මස්ල් එක පොඩ්ඩක් මෙහෙට කරලා පොඩ්ඩක් නැගිටි උඩ බලන්න. කියනවා කියලා මන් දිහා බලාගෙන ඉන්න මම දන්නවා මන් දිහා කියන දේ නෙවෙයි ආයෙත් ඉන්නේ කියලා. This is a very hard time. I have asked to give morning slot for me, but I'm having 3 sessions parallelly going on, same subject. So it's very difficult for them to manage time for me. So unfortunately, you have given this time. So this is a very theoretical subject, calculations there, but I'm trying my best to put the things to you. Right? අපිට පේන මෙහෙන් බලාගෙන ඉන්නවා ඇස්සෙනවා. right? හොඳට කාලා දීලා හොඳ බත් එකක් ගෙමු කාලා ඇවිල්ලා ඉන්නේ නේද? ඊට පස්සේ chewing gum එකක් කහා ඉන්න ඇවිල්ලා ඉන්නේ. ටිකක් වෙලා කකා ඉන්නකොට දිව හැදෙනවා. හරියට ඉන්නේ නැත්නම්. So you will automatically get up. Okay? Right. So the third reason was when you look at many of the problems were happened because there was no proper disclosure of information in our annual reports. Annual reports are good information hide color. So this create an issue on whether quality of the accounting information is correct. Right? So to ensure that this quality will be maintained, corporate governance codes were needed. So in corporate governance codes, I will show you in Sri Lankan context also, one huge section is there with regards to reporting and accountability. Right? They give you guidelines. In a good corporate, these things should be there. Right? So අපි මේවා follow කරනවා කියන්නේ අපි මේවා disclose කරන්න ඕනේ. So that gives assurance to the investors that these reports are prepared in the right way. Not only how you present the information, guys. Here the quality explain about the process that you follow to do the reporting inside the organization. How the transaction being captured, how the transaction is documented, how the transaction being approved. Everything matters to the quality of accounting. ඉතින්වා අපි disclose කරන්නේ කියලා. Disclose කරන්න කලින් වෙන process එකක් තියෙනවා accounting එක. එහෙම නේද? How you pass the standard, how you do it. This whole process is added to the quality part of reporting. Right? So you may be having controls over your accounting transactions, right? Financial transactions. So everything matters at the end for quality reporting. Right? So this process, starting until you disclose your information, you need to maintain this quality and ensure that these reports that you are producing, your annual accounts which are produced, are made in the proper way. Okay? So that is what says here. Issues concerning financial reporting were raised by many investors and were the focus of much debate and litigation. Shareholder confidence in what was being reported in many instances were eroded. While corporate governance development isn't just about better financial requirements, the regulation of practices, right? And see how you do the practice of all these recording, all these transactions happening, also has led to a great transparency and reduction in risk faced by investors. It's not only the reporting, everything, the whole process. There should be assurance that it is done in the proper way. Next one, institutional investors. So when it's come to institutional investors, you know who are institutional investors? None. Who are you and me normally? We are individual investors. Right? So we are individual. Institutional again. Organizations going and invest on other organizations. Right? You take EPF, ETF, National Lottery Board. They have a lot of funds being accumulated with them. Right? So they don't just keep that with them. What they do is they invest on government projects, they invest on shares of the companies, right? So they go as institutional. They go as an institution to invest, right? So when they invest, they don't take like you and me 50 shares, 100 shares. They buy in bulk, right? So then their power is more, right? So these institutional shareholders also now pressurizing companies to adopt corporate governance practices. Can you tell me the reason? Any? Why more than individual shareholders? Why their influence is significant? But whose money are they having? All these institutional investors, they will only sell it. Somebody else's money put into their organization. EPF, ETF, and all those things. Our employees and employees' money is going to a fund, right? So this is not only this is not their money. They are handling somebody else's funds, right? So if a company that they have invested collapse, can you understand the repercussion of that would be? Institutional investors right? They are using somebody else's money for investment. So they need to ensure that whatever they invest, they get a return back, and it should be something safe. Right? So therefore, and companies also need to understand, rather than getting individual 1 or 2 investors and coming where they buy small shares, these institutional shareholders are the best ones that should come to them because they bring a lot of funds, right? Therefore, as I said, because they are using somebody else's money, they need to ensure that they get that money with the return, right? Therefore, they are powerful as well as they were pressurizing a lot for the companies. For them to invest, you should have corporate governance practices implemented in the right way. ඒක demand කරනකොට organizations වලට ඒවා implement කරන්න වෙනවා. Right? Corporate governance practices were needed to be implemented. Can you remember the 4 pillars which I was discussing about corporate governance practices? Okay. But because my laptop is not connected to this. Right? So I can only download that day's lesson. So that is why I can't go back and show you all what we did last 2 weeks. But you should have them with you. And you remember we studied corporate governance, which come to board governance. There were 4 pillars. First one was board, right? Daily composition, mix, board of directors and all that. Second pillar was what? Their remuneration. Can you remember? Third one, maintaining the relationship with shareholders. Fourth one was accountability and auditing. So those are the key 4 pillars in corporate governance with regards to board. So under each of these categories, you have codes telling what is the way you should have it. Those are called the codes. So we are showing that we are a company which governs in the proper way. Right? A corporate governance codes only. A corporate governance codes follow annual report. Right? So that gives the confidence to the investors. That is how this works. Right? Corporate governance codes are there. So according to those codes, organization implements certain things, and that implementation they report also. That is how corporate governance builds confidence in investors. That is why corporate governance is needed, corporate governance practices. Right? Otherwise, if these codes are not there, organizations will manage it the way they want. Right? That is why all these collapse happen. So these guidelines giving, this is the way an organization should govern. So then organization adopt those things, they practice those things inside the organization and they report on those things. So that is how the confidence of the investors build. That is how the regulators look at whether this company is governed in the proper way. Okay, that is the reason why this topic called corporate governance has come up. Right. Next one, regulatory initiatives. Action by regulators to mandate or encourage improved governance practices. Not like those days. Now regulators are also very much concerned on implementing these corporate governance practices. So when it comes to regulators, one part is the government. Government is concerned, but government concerned implement the channel letter. Once I said, can anyone remember how this corporate governance codes normally implemented? Anyone? Any guess? මේ අපි කතා කරන්නේ investors like මේ කොහෙද? share market එකේ නේද? right. ඒතර මේවා implement වෙන්න ඕනේ මොකක් හරහාද? share market එක හරිනේ. ඒතර share market එක regulate කරන්නේ කවුද? Securities and Exchange Commission. තේරෙනවද? these corporate governance codes development එකට මූලික වෙන්නේ ලංකාවේ Securities and Exchange Commission with collaboration with CA Sri Lanka. Right? එතකොට මේක implement කරන්න මූලිකම වෙන්නේ as the regulator, Securities and Exchange Commission. So they connect with CA Sri Lanka because they are into the accounting side, right? So the governance part is more on that side because accounting, reporting and accountability side is there. So they connect and they do the code development, right? They do the revisions and all those things. So main part is when you take the regulatory initiatives as a country, government needs to take this up, but they have given that to the Securities and Exchange Commission. So hammer atema make implement වෙන්නේ ගොඩක් වෙලාවට authorities of a stock exchange. Right? Colombo Stock Exchange is not a government organization. දන්නවා නේද? Not a government organization. Securities Exchange SEC. Okay, sorry, Colombo Stock Exchange. Sorry, Colombo Stock Exchange is not a government organization. ඒක මොනවාගේ කල්ද? කොහොමද ඒක හැදලා තියෙන්නේ? අලමයි. කොහොමද හැදලා තියෙන්නේ Colombo Stock Exchange එක? It's broker companies have got together and have formed that Colombo Stock Exchange. It's not a government institute. Now you have to, it's a profit-making institute. Colombo Stock Exchange. උන්ට කියවලා බලන්න ගිහිල්ලා. ඒගොල්ලන්ට නිකන් කතා කරන්නේ don't call, we are not government. They are connected with to manage the stock market operation. The only government body is Securities and Exchange Commission. Now you have to remember that. Colombo Stock Exchange is not a government organization. Combination of broker companies have got together and formed that to trade the shares. That's all. Okay. Then the last one is social expectations. So with all these problems happening in organization, there were impact for the social aspect as well when they do things, not only to their investors, even the other people around who are living are also get affected by this corporate collapse. So there was social pressure coming from organization, right? The rising expectation from society for corporate responsibility and ethical behaviors. So these 6 reasons, 6 levels, 7 reasons. Starting, what is the first one? What is the first reason for corporate governance codes? Any word? මං කිව්වේ ඉතින් පළවෙනි එක මොකක්ද? අතුම දාන්න ළමයි කොළ කෑල්ලක මොන හරි ලියන්න. Then your hands move. You guys don't know this subject is, I just marked in the last batch papers and gave. Majority has not scored well. I'm telling you, right? Take a piece of paper, at least move your fingers and write key points rather than sleeping now. If you can't recall what was the first thing I said, how are you going to keep all this in your mind? What was the first reason for the courts to come up? Corporate scandals. What was the second thing? The second thing. What was the second thing? Globalization and international transactions. Third one, investor concerns. Right? Investor concerns is the fairness of treating everyone the same way. Fourth one, quality of accounts. Fifth one, the pressure coming from institutional investors. Fifth one, regulatory initiatives to implement corporate governance practices. And last one, social expectations. Please do move, write something. Don't just wait looking at my face. You will not get anything. Right. So all these pressures, all these 7 factors were pushing for corporate governance codes to be developed. Means 6 factors were pushing corporate governance codes to be developed. So that is what explained here. To combat these problems, codes of best practices were developed in many jurisdictions. Jurisdictions means countries. Okay? These corporate governance codes ensures mainly these 3. You have to understand. Corporate governance codes have a lot of principles, but out of these principles, these 3 are the core. Right? These 3 are the core. That is transparency, accountability, and integrity. Right? For successful running a company and forming solid professional relationships among its stakeholders. This corporate governance codes ensures this, right? Transparency, especially when it's come to reporting and everything, right? Transparency, not only reporting, deciding how the board of directors were appointed, reporting on how their remuneration package was decided. So everything is going to be transparent, right? That is where the transparency comes. Accountability means who is responsible. Right? I told you accountable means that who is going to be answerable if an issue happens. And integrity. What is the integrity? Doing the right thing even if you are standing alone. Right? Doing the right thing even if you are standing alone. So these corporate governance ensures these 3, which is needed for successful running of an organization, as well as forming a solid relationship with your stakeholders. So the development of codes has also been prompted by the need to clarify ambiguities in law. Then law then you have for companies, what do you have? Company law. Company law is there. So when you have company law, which details on lot of things, right? You may have studied when you are doing, if you have done business studies in your A-levels. It's a big document which says how to form a company, how the director should be appointed, how the registration should be done. So much of information is there. So when it's come to the law point of view, company law is the powerful law. Right? Company law is a powerful method. I make a PhD, I have to know corporate governance code killing. You can ask that question, right? When you have the company law, which dictates everything about how to start up, how to form the board, what are the responsibilities of the directors. ඔක්කොම ඒකෙත් තියෙනවා. එහෙම වුණාම ඒ corporate governance code එකක් කියලා එකක් ඕනේ වෙන්නේ. The reason is here. In sometimes the laws that we have may have ambiguities in law. Even a law is very clearly defined වෙලා නැති වෙලාවක් තියෙනවා. Right? That is what it says, ambiguities in law. So නීති වල හරියට හැමදේම cover වෙන්නේ නැති වෙන්න පුළුවන්. Ambiguities in law, that is the first one. And the other thing is, or require higher standard behavior than the local registration require. සමහර වෙලාවට අපේ company act එකේ තියෙනවට වඩා අපිට high standard behavior එකක් companies වලින් ඕනේ. Right? So මේ දෙක cover වෙන්න නම් මේ corporate governance code එකේ සෑහෙන push එකක් තියෙනවා. Right? So the corporate governance code is therefore try to clear if there are ambiguities in the law, it tries to clear that through the codes, as well as if what the company act says is not enough, you put some higher standard of conduct for companies in corporate governance codes. Right? So in that way, corporate governance codes support more proper management of companies. Okay, so always remember company law is there. Laws තියෙන companies වලට. Even they try to regulate the governance of the organization. But even with those things, why you go for corporate governance codes is mainly because sometimes there can be ambiguities, not clear things in the law. Sometimes you may want higher standard of behavior than what the law says. Therefore, to cover up those things, you may need corporate governance codes. Then they say codes have also been developed to ensure local companies comply with international best practices. Right? I told you international wise you have the corporate governance codes and this local one needs to be in line with that. So that purpose is also covered through these corporate governance codes. This is what the important part. These corporate governance code can be either on rule-based or principle-based. Rule-based and principle-based approaches differ in communication, management, and monitoring of codes. Principle-based and rule-based තමයි අපි ඊළඟට කතා කරන්නේ. මේ දෙක වෙනස් වෙනවා. How you communicate these codes, how you manage these codes, and how you monitor these codes. Rule-based approach and principle-based approach differs between these three. We'll see how, right? Communication, management, and monitoring. We'll take one by one. So firstly, we'll take rule-based approach. බලන්න මොකද මේ කියන්නේ කියලා. Can you understand what they're trying to say here? Rule-based approach. මොකක්ද හිතන හැටියට? Corporate governance codes හදලා තියෙන rule-based එකක් හැටියට කියන එක. What can you say? What is your idea? Exactly. It comes as a rule means you have to comply with. Right? කිසිම exemption එකක් නැහැ. That is what rule based means. Rule එකක් කියන්නේ නීතියක් නේ. Media capital regulatory frameworks. Okay, regulatory frameworks. But hanky panky you have to do it. Rule-based means that if the corporate governance codes are coming as a rule-based approach, as it says, everyone needs to comply in the same way as the rule says. Rule for an instance, for an example, they are telling you should have a board with 5 executives and 6 non-executive board of directors. That is how they say, rule. Whatever the company you are in, you all have to apply in the same way. Can you understand the rule base? Media හැටියට. ඒතර නීතිය කියන එක කම්පැනි වෙනස් වෙනවද? නෑ. මොන කම්පැනි වුණත් එකම විදියට තමයි apply කරන්න ඕනේ. ඒතර rule based approach එකේ තියෙන විදිහ එකයි. නීතියමයි එන්නේ. Right? So because they are coming as a rule based, they come as an, can you guess? As an act. නීතියෙන් අපි කම්පැනි ඇක්ට් කියලා කියන්නේ ඒක නීතියෙන් අපිට සමාගම් වෙනුවෙන් තියෙන දෙයක් නේ. රයිට් නීතිය. ඒකට ඕනම කම්පැනියක් කම්පැනිස් ඇක්ට් එක ෆලෝ කරන්න ඕනේ. Right? Whenever you have established a company, you have to follow Companies Act. There's no way you can violate that. So if a country is following a rule-based approach to corporate governance code, then their corporate governance code comes as an act. Act එකක් හැටියට පනතක් හැටියට තමයි එන්නේ. පනතක් හැටියට එනවා කියන්නේ corporate governance code එකක්. That is through rule-based approach. They are following rule-based approach when developing and implementing corporate governance practices. The organization does not have a choice. All the organization need to comply as it says. Right? As it says, you have to comply. So it says a rule-based approach to corporate governance is based on the view that companies must be required by law. එතකොට මේක follow කරන්නේ නැහැ කියන්නේ you are violating the law. You are violating the law. So penalties are there. You know that, right? එතකොට compliance requirement එකක් නේ. එහෙම නේද? නීතියෙන් යම් කිසි දෙයක් organization එකකට කරන්න ඕන නම් ඒක compliance. Comes under compliances, right? You guys are working, you may have seen. So it's a compliance requirement. So if you have not followed, if something that has enforced through rule-based approach, you have to pay penalties for non-compliance. Remember that. Okay? You have to. Then, so to comply with established principles of good corporate governance, the rules might apply only to some type of company, such as major stock market companies. Sometimes they can say that these rules apply to these type of organization, public companies, right? Private companies, rules are in this way. So they can say rules can be applied to some type of companies. However, for the companies to which they apply, rules must be obeyed, and there are sometimes there can be very few exemptions. Very rarely that could happen. Otherwise, everyone in that category needs to apply in the same way. Right? If you don't comply, you are going to get penalties because it has come as a law. It has come as a law. Right. So these are the characteristics, right? Characteristics of rule-based approach. Read the first one. Emphasis on achievement. Rule-based system place more emphasis on definite achievement rather than underlying factors and control system. The target will be set and disclosure requirements are emphasized of whether or not targets have been achieved. However, there may be little incentive to achieve more than is required by rules. කෙලින්ම කියලා කියනවා මේක තමයි අපිට ඕනේ. ඒක තමයි කියන්නේ emphasize on achievement. In your board, this is the composition it should be. Right? in your reporting, this is the way you should do it. So the outcome this is what we want. Can you understand? That is what it says. Emphasize on achievement. What you need to achieve, they will say in the rule clearly. In your board, this is the composition it should be. Right? In your reporting, this is the way it should be. So the achievement that you need to get is very clearly being told. Right? Not the process that you have to follow. Right? They are very clearly telling what the final things that you need to have. That is what it says. The target will be set and disclosure requirements are emphasized. Over the main report karan. Right? Board composition how do you report that in your annual report? Everything clear cutly being told. So it's easy to follow when you have things. So what he thinking no the company. What karan no clear. Right? So karan clear there are a lot of disadvantages. Right? There are a lot of disadvantages also. But only thing is, it's very clear what you need to achieve, what you need to report, and all that. However, there may be little incentive to achieve more. Now, if they tell you this is what is needed, are you going to do more than that? Are you going to do, if though it is better, are you going to do more than that? And you need to understand applying these corporate governance practices are costly. Right? May board appoint board maintain may reporting may hammer them costly. But they are costly now. Right? You are using shareholders' money for some governance control purposes. Right? They have a salary. එතකොට මේ සල්ලියන් වැඩිපුර governance දේවල් කරනවා කියන්නේ වැඩිපුර අනවශ්‍ය දෙන්නේ කම්පැනිටම ආයි ඉන්වෙස්ට් කරන්න තියෙන සල්ලි to expand. Right? You are using for governance purposes. You are using to ensure that your company is run properly. Right? එතකොට වැඩිපුර දේවල් කරනවා හොඳ දෙයක් වෙන්න පුළුවන්. Right? Governance වල this would be a better way. But you don't go for that. You will always stick to the rule and try to fulfill the rule. Right? That is what it says here. However, there may be little incentive to achieve more. Second one, it's a compulsory compliance. No hanky-panky. You have to do it as it says. Right? Rule-based approach allows no leeway. The key issue is whether or not you have complied with the rules. Comply then. Right? Because it said clearly what you have to do. Right? So, if you comply, that's it. How if you have complied in a different way, you can't explain how you have done it. Right? It's like ticking the boxes. Right? Rules right? There is no flexibility for different circumstances for organization of varying size or different stage of development. Wherever you are listed. Right? So you need to understand, though your company is a small or a large one, you don't have an excuse. Right? Having a board with 6 executive or 6 non-executive and 4 executives. The higher board එකක් තියනවා කියන්නේ maintain කරනවා කියන්නේ තමයි මාන cost එකක්. Right? හුඟක් ඉන්නවා කියන හොඳයි. Board members ලා 10 15 වැඩි වෙනවා කියන්නේ හොඳයි. But you need to understand with that there is a huge cost involved. So if I am just a small company, will I be able to bear that? The rule එකක් හැටියට කිව්වොත් members 10ක් ඉන්න ඕනේ. 6 should be this much, 4 should be this much. I have to do it. I have to comply because it's rule based. I can't say no, I'm a small company. I can't. No, rule is rule to everyone. And you understand that the problem in rule based, right? So you have to comply to that, whether you are a big or a small company, in the same way, or whether you are in the start or maturity level of the company. Starters also you can't afford that much, no company. If you are in the maturity level, now you are earning, it's good, so you can maintain what they are telling. But at the start, it's very difficult. But there is no flexibility is given on those conditions. Okay, that is the problem. Third one, visibility of compliance. Since everyone follows the same rule, so it's clear to see whether they have complied or not. There or not. Company. So it's very clear what you have done. Each company, what they have done with regards to the rule, we can clearly, visibly see. That's what it says. It should be easy to see whether there has been compliance with rules. Comparison between companies would be straightforward. However, that depends on whether the rules are ambiguous and the clarity of evidence of compliance and non-compliance. We can compare companies very easily. Rule එක හැමෝම apply කරා. හැබැයි සමහර වෙලාවට rule එක හරියට දාලා නැත්තා. Because rule needs to be dictated clearly. There can't be any loopholes. Have you seen in rule base? The නීතියක් හැටියට දෙයක් දැක්කම ළමයි අපි ඒකේ loopholes හොයනවා. ඒකෙන් ගැලවිලා යන්නේ. Right? නීතියක් නැත්නම් අපිට නිකන් freely කැමති විදියට කරන්න කිව්වොත් we don't look for loopholes. We just do according to the extent that we can do it. But නීතියක් හැටියට ඕන වෙලාවක බලන්න. If something is put as a law, people look for loopholes. People look for places where they have not defined the things properly. Right? In companies also we do that. We just look at have they defined things in the clear way. Make a hurry defined color. So this is a place where we can trick. That happens, right? So rule-based approach, you can do the comparison easily because everyone applies in the same way. But to come to that level, rules should not have any ambiguities. Rules should be defined very clearly for people to follow it. If there are ambiguities, if there are places that are not clear, then people find loopholes and trying to escape. Okay? So that is the third one. Then you have this limitation of rules. So as I said, rules should be very clear, right? Otherwise, if there are loopholes, they will try to get out from that. That is what says limitation of rules. Rules to cover all the corporate governance areas. First thing, you should have comprehensive rule set, right? කොහොමද rules හදන්න ඕන. Second එක තමයි rules clearly with lot of clarity needs to explain. Otherwise, people will find loopholes and escape. Right? The last one is if you don't follow, there will be criminal sanction. Right? Crime එකක් කරා වගේ තමයි මේ codes follow කරන්න නැති එක. That is what it says. Rule-based approach to corporate governance tend to be found in legal jurisdiction and culture that laid great emphasis on obeying the letter of law rather than spirit. අපි මේක එකතු වෙලා මේක හොඳ දෙයක් හැටියට කරනවා කියන එක තමයි spirit එකකින් කරනවා කියන්නේ. මේක දැන් අපි හොඳ දෙයක් හැටියට නෙවෙයි කරන්නේ. මේක මේ law එකෙන් දාලා තියෙන කරදරයක් එහෙම හැටියට කරන්නේ. ඒතකොට spirit කියන එක නෑ. spirit කියන්නේ අපි ඔක්කොම එකම වෙලා හොඳ විදියට what we try to do in a better way, that is called spirit. But in rule-based culture, even in a school, if you have too much rules, right, we obey them because they are rules, right? But sometimes we allow students to have their own self-discipline and come up. So then, internally with your spirit, you come up with the right behavior. Can you understand the difference, right? So there is a huge difference in that. When you put rules and when you try to behave people, then it comes out in a different way. But when you give freedom for people to realize internally and develop their own self-behavior, that comes like a spirit, like we collectively want to work towards a better thing, right? So here what under rule-based is people obey it because it is a law, it is something you have to do. So if you don't do that, there are going to be cost. So if you have in here, it's like more obeying the law rather than doing it with the spirit. Serious breaches will be penalized by criminal sanctions. They often take the form of legislation themselves, not notably Sabana-Oxley Act, which we shall discuss later as the most relevant example of rule-based approach. The amount of legislation for business in these jurisdictions may give rise to significant compliance costs. But if you don't comply, there are penalties which we call compliance cost. Are you there? Right. So these are the characteristics. So when it's come to rule-based approach, which is known very well for rule-based approach is the Sabana-Oxley Act of 2002. Any guesses which country? USA after Enron case. Enron case happened in 2000. So after that, USA were very strict on their corporate governance. So they are the people who introduced the first rule-based governance, corporate governance code. And you see, I told it comes as act when they introduce something through law. So that is why it's called Sabana-Oxley Act 2002. Right? So they are this is very famous corporate governance code, which is followed by many countries taking from that, right? So this act, right? The Sabana-Oxley Act of 2002 is a federal law in US that established sweeping auditing and financial regulation for public companies. So in their act, they are focusing on criminal punishment, accounting regulations, new protections, and corporate responsibility. These are the 4 areas they clearly focused on. But I have given you a reading material on this. The problem is I don't know how to go to the do you know how to go to the can download that. Oh, this is not opening. Can you guys download that? Okay, you need to go through that. I can't open, but I don't know whether this has it or not. I have given you an explanation about what is Sabana-Oxley Act, right? What they were mainly trying to implement through Sabana-Oxley Act. I want you to go through that, but can you all download that from your devices? It's there in it. I have uploaded that to the LMS. Please do read it. Right? We can take a break now. Right? But break means I want you to read that. I 2 o'clock will start, right? You can go out and come because anyway you guys were out most of the time, so I don't think you need to go out, right? So I'm going to start at 2 because this lesson is a very big lesson. Okay, but I want you all to read to understand what were the new things they brought up. So first part they are talking about in that what were the issues in Enron case, right? First section is about that. If I can take from my laptop. Guys, we'll do some serious work, huh? This, otherwise, it's going to be difficult. Okay, so the first part it says, can you all please concentrate? First part they talk about the Enron scandal, right? So we actually went through Enron scandal a bit, but here they are firstly showing what were the key issues in Enron case. Lack of transparency in the accounts, ineffective corporate governance arrangement, inadequate security by the external auditors, information asymmetry, and the executive compensation methods. So those were the key reasons why Enron case happened. Then they talk about implementing the Sabana-Oxley Act. So then in that they are telling detailedly what were the key things that they were focusing on. They establish an oversight board. They are talking about that. Then auditing standards were more emphasized and they were forcing for implementation of that. Then non-audit services, they were talking about those things. Quality control procedures, audit and audit committee, then corporate responsibility. So those were the key things that they introduced under Sabana-Oxley Act. Right? Then those are the things that I want you to focus on. Just for the time being, since we don't have and we have studied the Enron case, please just look at detailed provision of Sabana-Oxley Act, that part, page 60, 65 to 66, that's all. What were the main thing that they introduced through Sabana-Oxley Act? You need to read that. I can't take it here. Right? So it will not take 10 minutes. So read that. If you want to take the break, go out and come. We'll start at 2 o'clock. Huh? Okay, guys. So we'll go through this quickly. So this was the document that I asked you to refer. So as I said, it says very clearly the Sarbanes-Oxley registration requires. We'll come to this one later on. Right. So this part talks about the scandal which happened. Right. So those the main issues, the most significant scandal in America in recent years has been the Enron scandal, when one of the country's biggest companies filed for bankruptcy. The scandal also resulted in the disappearance of Arthur Andersen, one of the big 5 accounting firms, who had audited Enron's accounts. The main reasons why Enron collapsed were over-expansion in the energy markets, too much reliance on derivative trading, which eventually went wrong, breaches of federal law, and misleading and dishonest behavior. However, inquiries into the scandal exposed a number of weaknesses in companies' governance. Governance means management. So these were the main governance problems. Lack of transparency in their accounts. So I have shown you they were not reporting in the proper way. Certain investments were kept out from the balance sheet. They were creating business units and they were transferring the profits to that. So they were kept off the balance sheet. Various other methods of inflating revenues, offloading debt, massaging quarterly figures, and avoiding tax were employed. They were through those mechanisms. The accounts are not transparent because of that. Sorry. Then, when it's come to the governance arrangement, the arrangement was not done in the proper way. The company's management team was criticized for being arrogant and over-ambitious. The economist suggests that Enron chief executive officer was like a cult leader with his staff and employees holding over his every word and following him slavishly. He was dominating when it's come to the governance. The non-executive directors were weak and there were no conflict. There were conflicts of interest. The chair of the audit committee was this one. Her husband received substantial political donation from Enron. See, when it's come to the governance, all things have happened with the connections and it was not in the best interest of the organization. And everyone was connected. Then external auditors, Arthur Andersen failed to spot or question dubious accounting treatments. Since Andersen's consultancy aim did a lot of work for Enron. I told you they were not doing non-audit services apart from being the external auditor. So that compromised their independence. Allegation of conflict of interest. Then information asymmetry. Information asymmetry is the agency problem. Information asymmetry, right? One set of people are having a lot of information and not given to the principal. So, information asymmetry is the agency problem of the directors and managers knowing more than the investors. The investors included Enron employees also. Some employees also invested in the company at that time. Many had their personal wealth tied up in Enron shares, which end up being worthless. So they lost in 2 ways. One, they lost their job when it became bankrupt. Second one is they lost their money because they have invested on the company. Okay? Right. They were actively discouraged from selling them. Many of the Enron directors, however, sold the shares before whole thing went bankrupt. Right? Directors, they had information. No? They sold their shares, but employees were clueless. They didn't know anything. It is alleged that the chief finance officer concealed the gains he made from his involvement with affiliated companies. So they see the amount of information asymmetry. Then executive compensation method. They were meant to align the interests of shareholders and the directors, but seem to encourage the overstatement of short-term profits. Particularly in the US, when the tenure of chief executive officer is fairly short, the temptation is to inflate profits in the hope that the share option will have been cashed in by the time the problems are discovered. So these were the key issues they faced. So then they brought this act. In the US, the response to the breakdown of stock market trust caused by the perceived inadequacies in corporate governance arrangement and the Enron scandal was the Sarbanes-Oxley Act. The act applies to all companies that are required to file periodic reports to Securities and Exchange Commission. I told you, they are the ones who have the authority. Even in US, their Securities and Exchange Commission is the one that has enforced this. The act was the most far-reaching US legislation dealing with securities in many years and has major implication for public companies. Rule-making authority was delegated to SEC on many provisions. How the rule right? Sarbanes-Oxley shift responsibility for financial probity and accuracy to the board's audit committee. So they were forcing establishment of audit committee, and they were in the audit committee, you will realize they were given more responsibility. So most of these things you may not understand because you have not gone through each and every component in the corporate governance thing, audit committee and all those things. But just to get an idea, if I say this, they actually in this act, they established a separate regulator called the Public Company Accounting Oversight Board to oversee the audit of public companies that are subject to securities law. Then company will audit karne to oversight that they established this company oversight board under this act. Audit karna again. Because Arthur Anderson at that time, they were the culprit of this. If they did their job properly, this wouldn't have happened, right? That is why they had this oversight board established. So the board has the power to set auditing, quality control, independent and ethical standards for registered public accounting firms. So actually they were, through this board, they were trying to control the audit firms. Accounting firms means that because if they are the ones who people keep assurance that it will give a true and fair view, right? So if those guys doesn't know how to do their job properly, then the whole system will collapse. People will not have faith on external audit reports. So there should be a mechanism to control them firstly. Make sure they do their job in the right way. So that is why they established this Public Company Oversight Board. So they were more into ensuring that these audit firms are doing their job in the proper manner, right? That was the first thing. The second one, auditing standards were brought, right? Audit firms should retain working papers. Then working papers picture here. Can you remember I told you when the things were happening in that story, which I shared with you in my first class, they actually burned when the issues were happening. They were, Arthur Anderson employees were burning the working papers of Enron. So it should not be the case. You are working in audit firms, you know how much important for you to keep the working papers, right? So they, from this act, they bought these kind of standards for audit firms. Right? So they have to retain working papers for at least 7 years and have quality control standards in place, such as second partner review. Right? As part of the audit, they should review internal control system to ensure that they reflect the transactions of the client and provide reasonable assurance. See, so likewise for auditing, they bought a lot of new standards that how they should do the auditing. Then non-audit services. they put a huge restriction on that. They said auditors are expressly prohibited from carrying out number of services including internal audit, bookkeeping, system design and implementation, appraisal or valuation services, actuarial services, management functions, human resource, investment management, legal and expert services. Maybe non-audit services, right? So they can't do these things if they appoint as the external auditor. Right? Provision of other non-audit services is only allowed with the prior approval of the audit committee. So they are telling prohibited from carrying out number of services, and if there is a need, it should come from the audit committee. So then you have quality control procedures. That is, there should be rotation of lead or review audit partners every 5 years. Ekama partner තියාගෙන ඉන්න බෑ. You need to rotate, such as independent requirement, consultation, supervision, professional development, internal quality and engagement. Then auditors and audit committee, they are talking about importance of auditors should discuss critical accounting policies, possible alternative treatments, the management letter, and unadjusted differences with audit committee. I'll tell you who are audit committees. Now you have the board of directors on the top, then board of directors, under them, there should be 3 subcommittees. Out of those 3 subcommittees, audit committee is the first committee. Take over, they have a lot of tasks. For an instance, they are the people who need to ensure that reporting of the accounting information, the process, everything is done in the proper way. That is the first one. Then they have to ensure that internal control systems of the organization is, you know what are internal controls, right? The organization certain control procedures are there. So those internal controls, whether they are implemented in a proper way and look at their effectiveness, will be done by auditor. Third one, they have to look for internal audit function. Internal control, internal audit function, they have. Internal controls, who develop internal controls? That's management. Right? Management develop. It's good. Internal audit function. Reporting whether internal audit is a different function. So audit committee needs to communicate with internal audit function. Right? Then the last, they have to coordinate with external auditors. So out of the 3 committees, audit committee has a lot of work. Second committee is nomination committee. Nomination committee board of directors appoint කරන්නේ කොහොමද මේ procedure එක handle කරන්න තමයි nomination committee. Third one is remuneration committee. That is to decide the remuneration for board of directors. තව එකක් එනවා risk committee කියලා. මොකද risk එක critical aspect එකක් නේ when I was teaching in the first class. So then you can have a risk committee also. If you don't have a risk committee, that risk management also needs to be handled by whom? We had 3 committees: audit, nomination, remuneration. The risk is part of the risk committee, audit committee. Right? So likewise, audit committee is a very strong committee in the organization. They have a lot of tasks, they have a lot of oversight needs to be done. Right? So therefore, in this case also, they make the audit committee more stronger in Sarbanes-Oxley Act also. Right? So you can see that auditors, their relationship with the audit committee was defined in this act, as well as the audit committee. Right? Every listed company should have an audit committee, and they should be independent. They should not accept any advisory fee from the company. Then the appointment of them, and all that were defined in that. Then corporate responsibility as a it says the chief executive officer and chief finance officer should certify the appropriateness of the financial statement, and those financial statements fairly represent operational and financial condition of the issuer. So they were made responsible to sign and say these accounts were made in the proper way. So they were given additional layer of responsibility now. Sign කරන්නේ සාමාන්‍යයෙන් chairman නේ, annual report එක sign කරන්නේ week chairman. But they were asked, these two people were asked to separately give a statement and sign. Then off-balance sheet transactions. If they are doing off-balance sheet transactions for those things also, they use restrictions. Then internal controls. Then that was included. We are one by one just get an idea. Then whistleblowing. Accounting division lady, she understood there is something going on, but she was asked to she was transferred to another section. So she was kind of a whistleblower, but she was not allowed to do it. Right? So then these whistleblowing provisions were also brought to the Sabana Oxley Act. So these were the key things that this act tried to enforce. But those were enforced as rules. Right? Companies follow the right? Otherwise, as I said, it's like breaching the law, not in compliance with the regulations. So there will be penalties. Right? You need to keep that in your mind because this comes as an act. So if you don't follow it, you have violated the act. Right? So these are the issues that will come. So going back to where we were. So if we wrap up, how many issues is there? Can you all see? Something is happening there. Okay. So if you take overall, these are the advantages of having rule-based approach. Advantages. Clarity and consistency because explicit rules and guidelines which help in maintaining clarity and consistency. Clarity clearly rule based and this is what you need to do. Right? And it is consistent, everyone needs to follow that. Second one, compliance and accountability. Facilitate compliance with legal and regulatory requirements, helping organizations to avoid penalties and reputational damage because now their accountability is really high. If you follow these things, that means you are fulfilling your accountability in the right way. Then, sorry, this is supposed to be only compliance. This is accountability. This part. This is only compliance. Facilities compliance with legal and regulatory requirements, helping organizations to avoid penalties and reputational damage. So this is accountability. What is that? Enhance accountability by clearly defined roles, responsibilities, and expectations for board members and executives. You saw very clearly in that Sabana Oxley tells you this is the role of the board, this is the role of the executives, and everything in a clear-cut way. So then it's very clear what are the responsibilities that they are having very clearly. Next one, predictability. Predictability in the sense people can't subjectively decide what this corporate governance code says. Right? Subjectively I will have one opinion. Somebody will have some opinion, another one will have something that is called subjective. But here you don't need any subjective ideas because rule is clearly mentioned. We call in that sense objective, right? So when the rule is clearly mentioned, it's very objective. That's what it says. Minimize subjective interpretation of governance practices, leading to more objective and fair enforcement of rules. So everyone will be clearly said this is the way you have to do it, and everyone has to apply the same way. Fairly application. Transparency, because promote transparency through clear reporting requirements and disclosures. It very clearly says these are the disclosures you have to do. These are the things you have. These are the disclosure obligations. Then finally, because it's very clearly being enforced, increase the stakeholder confidence by showing that this company is practicing corporate governance in the right way. Right? So clarity and consistency, compliance, enhance the accountability, predictability enhanced, transparency is promoted, and stakeholder confidence is enhanced. So these are the advantages. Same as that, disadvantages are also there. These are very rigid. It's very rigid. Can be rigid and inflexible, making it difficult for organizations to adapt to changing circumstances and unique situations. My company I may not be able to handle 10 members, right? It should be something which I can afford according to the level that I am having in the organization, right? So everyone can't adapt in the same way as the rule says. So there is rigidity and inflexibility. May not account for specific needs and context of different organizations because everyone same way, no? So, but the context of the organization differs. One organization context is different to the other organization. So, in that case, you can't dictate this is exact thing you have to do, right? You should give us some sort of a flexibility for organization to adopt that rule according to the situation of the organization. You need to understand that, right? But in rule based, there's nothing like that. As they say, you have to implement it. So there is less flexibility given for organization in the implementation. So it is going to be a big burden for the organization because they are not flexible. Okay, second one, complexity and cost. As I said, compliances to these corporate governance codes means huge cost. At the කියන හැමදේම කරනවා කියන්නේ අමතරව ලොකු cost එකක් යනවා. Okay, compliance with extensive rules and regulation can be costly and resource intensive for organizations. Increase the administration burden on organization, requiring significant effort to ensure ongoing compliance. So see how, like, this is an extra burden which is coming, right? With so many compliance requirements. Overemphasis on formality, right? Most of the time it's kind of box ticking. I told you, you have these points. If you have complied, it's like box ticking. Now, organization focus on formal compliance rather than the substance of good governance. As I said, you just tick the box that are there. We have done it likewise. Okay, ticking the boxes, but actually, as I said again, for things to behave in a long way or move in a long way, it should not come as rules. For my two kids, especially for my son, I'm very strict. But everyone is telling, no, you have to let the child to realize things. But I'm scared to let him to learn things and come up because it takes time, and it should come internal. He's not a naughty fellow at all. He's coming and telling, Mommy, I don't do big naughty stuff. He does small naughty stuff. Wash and ඒ වුණාට මම හරි මං යාට ගොඩාක් strict. ඒතර strict වෙන්න මෙන්න මේක කරන්නෙම නැහැ. තේරෙනවද? Organizations උත් ඒ වගේ තමයි. Right? Until they realize there is a need, this is something good for the organization, it should come internally from there. So when you put rules, it's a burden for them. Can you understand the difference? Burden එකක් වුණාම අපි කරන්නේ minimum කරලා නිකන් ඉන්න හදනවා. මේක compliance එකක් නේ. අපි මේකට කරලා පොඩ්ඩක් ඉන්නකොම ඇති. But if it comes internally, the need that we need to govern this organization in the proper way, that will take organization in a long way, right? But that does not happen. That does not allow through rule-based, right? It's more of a formality that you have to fulfill, rather than something important for the organization to move forward. Right? Make a formality. Then, limited scope for innovation. Restrictive innovation and creativity in governance practices as restrict adherence to rule. Matakeda creativity was one principle in corporate governance principles. Matakeda creativity here factor ekak. Right? This you should allow the organization to come up the good governance practices that they can implement. That is called creativity, because according to their organization, they can come up with creative ways of how good corporate practices should be, right? But this way, they don't allow creativity or innovation because the rule is said that you have to adhere to that. That's enough, right? So that will have a problem in enhancing the innovation. Right? There can be better ways of governing certain things, but organization will not go for that, and that will hamper the innovation of adopting corporate governance practices. Last one is, as I said, potential for loopholes. Rule එකේ කොහෙද loophole එකක් තියෙන්නේ කියලා බලලා ගැලවෙන්න තමයි හදන්නේ. තේරෙනවද rule based one? So these are the disadvantages of rule based. Then we are going to come. I have to go faster because it's a big topic. Make කරන්න තු අනිත් මේක නැතුවත් ඊළඟ දවසේ මේක මතක නැහැ. ඒක නිසා මේ දෙක මේකට කරලා කොමාරි වලට ගන්න ඕනේ යට. Now this is the opposite of rule based. This is principle based approach. Here the intention is you give a guidance as corporate governance holds. Let the organization decide best way to implement it. For an example, rather than telling in your board you need to have 10 members, 6 executive, 4 non-executive, that was rule-based. No? Sorry, yes, rule-based. No? In principle base, you can say that have a balanced board. In your board, have a balanced board. So the balanced board can you decide company. Can you understand? So they, under rule based, as principle based, just provide key areas that you should have for your good governance. For the board, they will tell you these aspects should be there. But how you implement that in your organization is up to you. Can you understand the difference? So they give you the guidelines. You have to have a balanced board. You need to have a gender balance, or you need to have a balance of executive, non-executive. If decide කරන්නේ අපි compare. අපිට afford කරන්න පුළුවන් විදිහට we will decide how we are going to implement. So you can't say that we have not implemented. We have implemented according to the nature of the organization. Can you understand the difference? Okay. So the rule based is enforced as an act, but principle based are guidelines being given. So the extent you apply depends on the organization nature. Okay, so it says a principle based approach to corporate governance is an alternative to rule based approach. It is based on the view that single set of rules is inappropriate for every company. This is mainly because the most suitable corporate governance practices can differ between companies And the best corporate governance practices for company might change over time and circumstances. Right? Ek company and also with the time also it change. But remember, when you bring something as an act වෙනස් කරලා යන එක lazy නෑ. තේරෙනවද? When you look at our company's act, do you know how old is that? Right? Act එකක් වෙනස් කරන්න lazy නෑ. Do you know how to change act? It should go to the parliament and that act should get 2/3 of the votes and then you have to change that. That is how act is passed. Right? So changing act will not happen frequently. So the rules that you put as a corporate governance 10 years, 15 years back, you may have to apply now also if you follow the rule base. But here, when it comes to principle base, since you give the guideline only, inside that what you have to do, with the time you can change. How you apply with the time you can change. Right? So the argument that they bring is these two. More suitable corporate governance practices should change from company to company. It should not be the same way. That is the first one. Second one, it should change with the times and the circumstances as well. Right? So to allow that, now we don't bring corporate governance codes as rules, but as guidelines. එතකොට අපේ ලංකාවේ තියෙන්නේ මේ principle based approach. We have given guidelines. Board should have this, board should have this. So how we are going to apply is up to the company. So in their annual reports, how they have applied, they have to report. Right? If they have not applied, they have to explain why this was not applied. Right? Apply karana, apply karana, comply karana, comply karana. If they have not complied, they have explained. Okay. It is therefore argued that corporate governance code should be applied all major companies, but this should consist of principles, guidelines, not rules. Right? Principles or guidelines which are mainly not rules. Guidelines or provisions should be issued with the codes to suggest how the principles should be applied in practice. Right? And guidelines they know it. කොහොමද මේ principle එක apply කරන්නේ? දැන් compliance balance board කිව්වහම ඒකේ අර්ථ guidelines තියෙනවා. මෙහෙම කරන්න, මෙහෙම කරන්න, මෙහෙම කරන්න. ඒක up to us to decide how we apply. Right? Always we need to give guidelines with the principles. As a general rule, companies should expect to comply with the guidelines or provisions. However, the way in which the principles are applied in practice might differ from some companies for some time. Companies should be allowed to ignore the guidelines if this is inappropriate for the situation and circumstances. When a company does not comply with the guidelines or provision or code, it should report this fact to the shareholders and explain the reasons for non-compliance. Flexibility non-compliances you have to report. I make a complying activity. Shareholders. So you are being given the flexibility to adapt things according to your circumstances, but if you are not complying with that also you need to explain. Right? So if you look at the features like the earlier one, have a look in this. Please read, guys. When I say for you to read, I want you to read that. Right. So it says focus on aims. So that means here we are not focusing on outcome. The reason under principle base, we are focusing on why we want this. Right? That is what it says, focusing on, focus on objective. I make an objective, I explain. Right? Not the outcome that you need to achieve, like rule based. Rule based outcome, right? But here we want to have a good board. That is what they say, good board. So they under that the good board means these things. So it's more of explaining the focus of having the codes rather than telling mechanism by which the objective will be achieved. So you can integrate them to your business operations. Second one, flexible, right? Principle-based approach can lay stress on those elements of corporate governance which the rules cannot be applied. So it's flexible on its application. Then the breadth of application, principle-based approach can be applied to international wise. The guidelines at the end, but rule-based approach can be applied to a country only. Right? Apita ba internationally gila rule-based da. Country ekak ඇතුලේ පුළුවන් rule-based da. Right? But if you want to apply to international context, it should be as guidelines. So guidelines mean principle-based. That is what it says. Breadth of application. Principle-based approach can be applied across different legal jurisdictions rather than being found on the legal regulation of one country. On your international standards, principle-based. Because it's common to all the countries, so you can't put it as a law. You can put it only as a guideline. So these international guidelines are coming as principle-based. Then role of capital markets. Principle-based approach has been adopted in jurisdictions where governing bodies of stock markets have had the prime role in setting standards for companies to follow. So normally, principle-based approach is governed by the stock markets. But rule-based one was governed by what? Authorities. Right? Rule-based one was governed by authorities, but here the principle-based ones are governed by stock markets. Here what I said, comply or explain. I told you this provision, last time I asked a question, what is comply or explain? Amount of answers being given, my God, I don't know you. Comply and explain, can't you understand what the meaning of comply or explain? My God, I was questioning. So it's simple sense. It's a one of the core area of principles-based. Principle-based approach. Core concept comply or explain. Right? Because it's not a rule-based. If it was rule-based, rule will be clearly said and you have to comply. Right? Why this comply or explain came? Because you have given no flexibility under principle base. So what you expect from comply or explain is one thing, two things, which is state that they comply with the provision or guidelines in the code for applying principles in practice. Comply, let's say we have complied in this way, you will explain. What is comply? Explain the non-compliances with any specific provision or guideline. If you have complied, right, you have complied with these things. If you have not complied, explain why you have not complied. That's all. A principle-based approach. Can you understand? There's a logic in that, no? Right? If you are allowing, if you are giving flexibility, at least you have to have this to ensure they adhere to corporate governance guidelines. Otherwise, they will not take this seriously at all. So while giving the flexibility, they have included this thing. comply or explain clause. Right? එතකොට comply or explain clause එක දාන හැටි මේක explain කරලා තියෙනවා annual report එකේ. Right? Company should offer clarity about the provision of the code that they have departed from by making it easy for the reader to find this in their annual report. Especially if you have not done some code, if you have not followed any code, right? That thing you have to explain clearly. Comply we have done this, we have done it in this way. Comply, you write. Because you are happy to say what you have complied, but you hide what you not comply with. But that is the place you have to explain. Can you understand? That is the place they want you to explain. So they are telling state in the compliance statement whether the company has fully complied with the codes, then has departed from any of the provision of the code, citing any provision that they have not complied. Comply කරපු නැති එකක් ගැන කියනවා නම් ඒ code එක අරගෙන කියන්න ඕනේ. Code එකේ number එක දාලා we have not complied with this because of these. Right? People don't do that. So you can see that now this one, two examples are there. Other than where expressly stated below, throughout the financial year ended 31st December 2019, the company complied in full with all regular provision of the code. They are telling now, have they mentioned which codes that they have not complied? Statement. So to make a vanity, this is wrong way of reporting. Right? They have mentioned other than where expressly stated below, throughout the financial year ended 31st December 2019, the company complied in fully. What are the things that have not complied? So this is wrong way of reporting. Then look at this. The board is committed to the highest standard of corporate governance and except, as set out below, the board has complied with the intents to continue. Blah, 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 have they mentioned what they have not complied? No. So these two ways of reporting is wrong. Is wrong. This is not comply or explain. This you brag about, you have complied with what you are complied, but you have not mentioned anything about non-compliance. So they are telling it should be like this. Read. Understand what I'm trying to say? They're very clearly saying which code they have not complied with, and this is the full explanation for that. So this is how this comply or explain thing should work. Comply means what you have complied. Explain and non-comply. Can you understand, right? So you have to say very clearly, except for provision 9, we have provided fully explanation. So you need to explain why you have not complied. So this is how you have to report. Under comply or explain condition. Okay. So now we are coming towards the end. So when you look at the advantages and disadvantages, I want you to understand that with the study that you have done with me, right? So you have to do some understanding by yourself what these words mean. Why first one? I පළවෙනි එක මෙහෙම advantage එකක් වෙන්නේ. Tell me. Why this is an advantage? Huh? Why this is an advantage? First take what is the reason behind first point? What is the reason? So, yeah, they are telling avoid registration, as you said, by making clear. It's not a rule. So there is no legislation. It's not implemented as a rule. There is no regulation, so that is why it's avoid legislation. Second one, less costly. Why less costly? You can put it in this way. Because you are going to adopt the principles according to the company nature. Right? So because you are adapting to company nature, you don't have to incur huge cost. You can adapt it according to the cost that you can afford. Right? That is why. Otherwise, if it was a rule, you are adapting in the same way. It would be more costly. Okay? Next one. Appropriate for the company. Why? It's going to be applied according to the company situation. Right? How we are going to adapt the principle will be according to the company conditions and situation. Okay. Next one, flexible. Because it's a guideline, we can adapt as we want and change with the time. Next one, emphasis on explanations. Not like earlier one, we have a clause telling comply or explain. So then you have to give an explanation on why you didn't comply with it. Right? Rather than telling you comply for non-compliances, you have to give an explanation why you didn't do that. Right? Last one, emphasis on investment decision. So this actually more focused on investors' decision making, and you are going to report. You are going to do the reporting and everything to influence the investor more than according to a law, right? You focus more on communicating things to the investor that they will be happy about. Other law fulfill and happy report was not focusing on the investor's needs actually. But here, since it was a principle, you focus more on build the confidence of showing how our practices are good. Investor confidence investor decision making investor decision making impact how you going to report on those things. Right? Not like earlier one, they are fulfilling a requirement. When it is fulfilling a requirement, you report in a different way. But here, now we are doing this practice, so we have to report that in a proper way where investors will be happy about it. Right? That is the difference in here. Emphasize on investor decision. So always in this method, when you are reporting, you focus on what the investor would think if we put these things, if we implement these things. So always you are in the mindset of an investor, not in the mindset of a regulator. Rule based na me regulator ke always monad maintain hitanne ki hitan penalty ek pani na apni kare natta. But investor if we do it in this way, what the investor for his decision making will that have an impact. So like that kind of thinking you will have. So that is what this point emphasized. If it was rule based, you always think what the regulator will think of this implementation, right? Whether we have complied with what they wanted or not. But here, since the freedom is given, you will decide how we are going to apply. So you will focus on more investor decision making, how this will impact. Make investor confidence very vague. Does this show that we are very transparent? Does this show that we are accountable? Right? Does this show that we are having integrity? So likewise, you always keep put into the shoes of the investor and think. Right? So look at the opposite. Broadness of the principle. What do you think of that? Broadness of the principle. I said principle based was rule based is very specific. Very clearly telling what you have to do. Guideline. Right? So guideline, sometimes companies may not understand what this guideline actually we need to do. Right? Usually clearly they understand what they have to do. When the guideline being given, sometimes they are confused what they actually need to do. Right? That is the first point, broadness of the principle. Then, misrepresent the company attitudes. Sometimes companies misrepresent what they are asking for under the guideline. Next one, you can't compare between companies because one company adapting one way, another company adapting one way. So it's investors need to decide based on their analysis which companies are good, having good corporate governance and which companies are not. Right? It's always investors assessment. So they come up with their name and you compare a company again. The investor based on his or her analysis of the company governance, which companies are good or bad. That is what you are going to do in the assignment. Right? You are going to take two companies and going through the corporate governance code of Sri Lanka, and you are going to list what this company has done, what the other company has done for the same guideline. Right? And you have to make your own judgment. Think of you are an investor and think whether which, according to this for this guideline, which company has done more genuine reporting, more genuine application of that. Can you understand? Likewise, you have to do it for the assignment. Right? Then confusion over rules. Because guidelines in the Pulan, company act in the Pulan, rules with principles with conflict and avastha. Right? Then which one to give a priority? Problem. But when you have rule based, that conflicts not happen. Rules then it will make samala rule principle conflict and so those are the disadvantages. Inadequate explanation of how this should be applied, and investor misunderstand the information given. Right? After they investors are more educated than element. There are literacy levels are very low for certain investors. Most of the investors, not certain. Yesterday or day before yesterday, my husband actually had he had some students to supervise for the final year research. So students have come and he was just asking, because he's the head of the department, he was just asking, where are you working at? So one boy has said, yes, he is working in a investment company. You know, pyramid schemes are already, right? So this pyramid scheme, it's like Kumada Sena's like a plant. Yeah, plants we do it. Evage make a some investment company. Totally a pyramid scheme. There, what's the name? About how the investor doctors. Right? More than 85% of the company investors are doctors because they are giving a return of 30%. So at this moment, who is giving 30%? Is any investment is giving 30%? No. The pain or the temptation of doctors like right? So this is totally, as I said, financial literacy. In life, you have to have financial literacy if you want to move forward. I'm talking about investors' perspective. Investor is understanding right? If you are an investor, equip yourself with the knowledge. Right? There are so many pyramid schemes. We call it as Ponzi schemes also, right? Don't get into the trap of these things. Your money, precious money, earned in the hard way, you don't want to lose it. Right? So tempting to get 30% at this time of the this country, 30% number with then there's the interest rate here then 7%, 8%. TBs here then. TBs here then, treasury bills here then. 8 point down then. Not 10, right? 10 will down. Below 10, as I know. Finance companies here they got. These are the finance companies here they have. 7% විතර දෙනවනේ ටිකක්. Normal commercial banks වලට ටිකක් වැඩි. නේද? Right? If you are an investor, you have to be vigilant on all these aspects. All these aspects. right? Right. So investors' misunderstanding is very high because they can't evaluate how this corporate governance information is put by different companies. Because a company, they do it in different ways. So they record in different ways. So they don't have, everyone doesn't have the literacy to understand what is good and what is bad. Take one. Right. Now I have taken few examples to show same scenario, how rule-based approach will look and how principle-based approach will look. Right? Examples, rule-based approach, how they are going to tackle it. Principle-based approach, how they are going to tackle it. So first one is with regards to financial reporting. Look at the scenario. A company has discovered an error in its financial statement that is not material, and correcting it would delay the report and be costly. That is the issue. Right? That is the issue. Now see guys, under rule-based approach, what you are going to do, and principle-based approach, how you are going to tackle it. See, and you understand the difference of how to approach, handle the same problem in two different ways. Because you look at the things in two different ways under the two approaches. In the rule-based, error needs to be corrected, whether it is material or immaterial. Right? The company corrects the error regardless of the cost or delay, because rules specify that all errors must be corrected, no matter how small. There are rule-based approach, corporate governance approach, you have to correct it. Can you understand? Can you understand here? Right. If you are in a country where corporate governance codes are being implemented on principle based, right? You are in a country where corporate governance principles are guidelines are applied in principle base, this will be your response. Look at how response. The company assess whether the error would affect the decision making of the users of the financial statements. So first of all, you have to decide whether this error has a material impact on the financial statement. Will that create any issue for decision making of our key users? If not, it might choose not to correct the error immediately, but disclose the discrepancy and correct it in the next reporting cycle, explaining the reason. See how the approach differs. Right? Errors need to be corrected. Take a guideline එකේ තියෙනවා. හැබැයි අර වගේ strictly කියලා නැහැ. එතකොට අපි correct කරන විදිය පේනවද වෙනස? Principle based approach එකේ rule based approach එකේ. Rule based approach, at that moment we have to correct it. Otherwise penalty being charged. But here they have given us the flexibility of how we are correcting it. You can't keep the error. You have to correct it, but you don't have to immediately do it if it is not something materially affecting the decision makers of financial statements. And they are telling the next cycle they will do it and how they will do it. Clear the medicine, okay? Rule based. Then take the next example. See. So you can see that there is a conflict of interest because a family member working in a competing firm. So your information can go to your company information can go to a competitor. That is the conflict of interest that will happen because of this relationship. Right? So under rule base, if this is the case, because a board member is found to have a potential conflict of interest due to a family member working in a competing firm. Board member කෙනෙක්ගේ family member කෙනෙක් ඉමාලු competing firm එක වැඩ කරනවා. ඒකට යාට information යන්න පුළුවන්. Board members වගේ information තියෙන්නේ. Right? So if it is rule based, this is the rule. The member is required to disclose the conflict and rescue themselves from related discussion and decisions as per the rules set forth. So he can't get involved in certain discussions. He has to avoid. That is what the rule says. But principle-based approach, how do they tackle this? The board member disclose the potential conflict and the board discussion the appropriate action. Board will decide for this what we should do. Artificially, main discussions will end the back. You can't. It should be avoided. Then board will discuss the appropriate action, which may still be recursive. But it's decided based on the principle of preserving the board's integrity and objectivity rather than the specific rule. So the board එක කතා කරලා තමයි decide කරන්නේ මේකට මොකක්ද කරන්නේ. Rule එකක් ගන්න නෙවෙයි ඒක board එකේ integrity එකට ඕන නිසා. Right? You need to take an action for that, but how you take the action is totally different from the first situation. At this third one, whistleblowing. Clear, right? I don't have to explain that. If it was rule-based, there's no tolerance for any non-compliance. You have to do a full investigation, followed up by corrective action and disciplinary measures. Right? But here, principle-based also, you have to take actions. Actions done there. The way you take actions differs. Right? It depends on the company environment. So how they tackle is the company assesses the impact of non-compliance. If it is a minor and not harmful, the company might handle it internally without a formal investigation, but take steps to prevent future occurrences and explain its approach to stakeholders. Right? So you have to handle compliant. Principle-based approach also says non-compliances are minimized. So if they say minimize, so how do you minimize? It's up to you. So this is the approach you will use to manage it according to the company situation. Last one is board diversity. Look at this. So this says board diversity means, guys, in your board, the members that you select should have different educational backgrounds, maybe from different geographical areas. If your company operates in different regions, you want board members from different geographical areas, and even gender diversity. You are going to study those things with me. So board diversity means that having different backgrounds, different knowledge and skills, gender differences. So those kind of things are called the board diversity. So here it says a company's board consisting entirely of members from same demographic and similar professional background. එතකොට rule based එකේ කියනවා if regulation requires diversity, the company must restructure its board to meet specific quotas or face penalties. Rule based එකේ කියනවා diversity means you have to have one member from this, one member from this, one member from this. කියලා ඒගොල්ලෝ define කරනවා. So we have to have members to cover those things, right? But in principle based, you have to have diversity, they say. So how are they going to look at? The company review its board composition, principles, acknowledging the value of diversity for effective decision making, and voluntarily seek to recruit more diverse members over time. Over time, they will fulfill this by recruiting members with different backgrounds, different genders, right? Likewise. So from these four scenarios, you have to understand the correction done through rule-based are very strict and not like less flexible, very strict, right? But when it's come to rule-based, they are also correcting those errors, but they are correcting in a more flexible manner. That difference you need to understand, right? ඒගොල්ලෝ මුකුත් නොකර ඉන්නවා නෙමෙයි. They take action, but the actions that they take is more flexible and towards the nature of the organization. So likewise, if you take the summary of these two, this is the last slide. Summary of these two, you can find this, right? Rule-based is a legal requirement. Principle-based is non-legal requirement. So, Code of Corporate Governance is set of legal requirement mentioned in the Act, right? This is an Act. That one is Code of Corporate Governance is set of best practices that companies should follow. I told you, those are principles and guidelines only. Compliance or non-compliance, judgments are being made by the court. If you don't comply or not comply, in a judgment take the court take. This penalty and law breach කිරිල්ලක් නෙමේක වෙන්නේ. But their compliance or non-compliance will be decided by the shareholders. Practically, it is difficult to set up rules that are suitable for every circumstances. This is the usual approach which most organizations in the world is practicing. Non-compliance will result in heavy penalties. Non-compliance will result in an explanation to the shareholders by the board. You have to give an explanation. But here, non-compliance means penalties. Here, an explanation. ඒවල පාර පොඩි වෙලාවක් තියෙනවා. Did you read that? Right. So according to this scenario, right here, according to this scenario, this company, what sort of approach are they having in this company, in this country where this company is? You have to talk. Right? What kind of approach are they having in this country? Rule-based. You have to first understand that. You are in a country where rule-based approach is there. Whether the directors agree or not, they have to comply. Right? Second එක කියන්නේ මොකක්ද? When you have rule base, what are they trying to get through? Loophole එකක් නේද හොයන්නේ මේකේ? Can you understand that? There is a rule, but they are trying to find a loophole in that. What is the rule? Recently, one director has noted that if one of the reports required under corporate governance is simply pasted into the postal system, then it is deemed to have been by the shareholders. Now, the rule is you have to communicate information to your shareholders, but the mode of sending it has not been clearly mentioned. The rule mode the mode of sending, that is the loophole they are finding, right? So this report, they don't want actually to be shared, but rule says this report needs to be shared with the shareholders. But now they are trying to find a loophole how to avoid get this information being sent to them. Right? Now they are very tricky. The directors are very tricky. They don't want to share this information. But rule says no, you have to send it. Then you have to send it. But they are trying to find that in this rule they have not mentioned the mode that we have to send it. Right? Physically, right? So they have said you have to send this, communicate this report to the shareholders. That's all maybe they have mentioned, I'm guessing. So they are trying to find a loophole. The loophole is they are trying to find a mode for sending this case through post. With the post again, බඩු නැති වෙන ප්‍රමාණය වැඩි. එතකොට අපිට කියන්න පුළුවන් අපි හරියට. Post එකේදී නැති වෙලා. Can you understand how they are trying to find a loophole in the process, right? That is one. However, with significant percentage of items being lost in the mail, this provides the company with a good excuse for non-receipt of the report. The director even went so far to suggest privately that the report should not be produced. Right? එතකොට report එක යවලා post එකේ නැති වෙලා. එතකොට මේගොල්ලන් වැරද්දක් කරලා නැහැ. So they have obeyed the rule. But they have found a loophole in applying this. Okay? So it says the first part, briefly explain principle and use-based approach to corporate governance. That you can do now. Then contrast the advantages and problems of the system of corporate governance in ACD's company's jurisdiction. So as you said, what is the jurisdiction that they are in? Rule-based approach. So you have to say advantages. Contrast the advantages and problems of the system of corporate governance in ASD's company's jurisdiction. So ASD is operating in a jurisdiction where rule-based governance practice, rule-based governance approach is there. So for the first part, you have to say the advantages and problems of that. Then you have to compare with the alternative approach to governance. So what is the alternative one? Is the principle sense. So first you have to contrast the advantages and problems of the rule-based with the principle-based. So make the advantages, disadvantages liyanne naha. First one is briefly explain the meaning of principle-based and rule-based only. This part you have to mention this country is operating in a rule-based governance approach, jurisdiction. So in that, these are the advantages, these are the disadvantages. Then the best one would be the principle-based, and in the principle-based, these are the advantages and disadvantages. So that is the kind of answer expected in this. So here the question is straightforward, but the information is little confusing. Right? May part is confusing. The questions are straightforward, but you need to understand this part to answer this. Right? You have to expect these kind of questions in your paper. Right? These kind of questions, there is a high possibility you will get. Okay, so first of all, you need to read the scenario to identify what is their approach, and always it will be compared with another one. Right? So you need to know everything. So that's the end. Are you okay with that? Terunada? Right? Okay. So we'll wind up and meet next week.